The pandemic may have decimated many industries, but there are some outliers like container shipping. Now, shippers, including the Mediterranean Shipping Company and Maersk, sailed into a once-in-a-lifetime market boom. Industry watchers say that though they were past the peak, while signs of a slowdown are already evident. CNA's Elizabeth Neo has more.
The container shipping industry enjoyed a bumper 2020 to 2022, boosted by soaring demand for masks and other personal protective equipment to consumer spending during lockdowns and when curbs were relaxed. It was an exceptional period that came at a time of stagnant growth. One of the biggest players, Maersk, recently lifted its annual profit forecasts for the third time this year. It raised its full-year forecast for underlying operating profits to about $31 billion from $24 billion. The sharp rebound from 2020 in spending came as a surprise for the notoriously volatile sector. Drewry estimates the entire industry made an operating profit of $26 billion that year, and that figure jumped to $210 billion in 2021 and is expected to hit $270 billion this year. Industry watchers say it's an anomaly, but the container shipping cycle appears to be coming down from its highs. Soaring inflation and looming recessions in some economies have lowered demand. Even the typically busy August to October period, where businesses move goods for the year-end retail season, appears to have weakened.
We're expecting perhaps a more moderate peak season. It depends a little bit on how the sort of zero COVID policy in China plays out, and whether the lockdowns, depends how the energy crisis plays out, and we'll have a better feel for it.
What we're seeing this year is actually a very slow start. In fact, it was reported that the Trans-Pacific eastbound rates had dropped to below $5,000. A year ago at this time, it was sitting at $15,000 to $20,000 per 20-foot equivalent unit or per container. So we're seeing rates drop to $5,000 and below. And there's even signs that it's going to very soon, or possibly even reach the $2,000 US per TEU mark, which is what we used to see pre-COVID.
Drewry also saying the spot rate for the benchmark route from Asia to the US fell to slightly less than $5,000 per 40-foot container, marking the first time the index has slipped below that level since December 2020. But it's still double the pre-pandemic level. Maersk says a gradual normalization of freight rates would likely happen only in Q4, while the Logistics and Supply Chain Management Society expects significant downward pricing to start in the first quarter of next year.
Globally, shipping costs are a key driver of inflation. When freight rates rise, prices for goods do too. Although the pass-through to inflation from freight rates is less than those associated with food or fuel costs. But it's volatile, which makes for price shocks.
Or we're just seeing the general cost of living rising. And this is, of course, really impacting the inflationary state that we're seeing at this point, that wages aren't rising anything like at the same pace as food, housing, fuel, things like that, energy. And so this is a genuine concern for the market, but it's a difficult thing to come about because it's a free market, and the people who own and operate the ships are perfectly at will to charge whatever they like and whatever they see fit.
For now, though, lower shipping demand and prices means costs should come down and supply chain logjams should ease. And so the container shipping industry is bracing for an impending lull. But it's confident the strong earnings from the past 2 years can cushion some of the impact, and it's already looking to catch the next wave.
They're looking for something to replace COVID, and sustainability looks like, at this early stage, like the new big thing that the third-party logistics companies and shippers are looking at. So yes, things are rationalizing, things are slowing down, but it's nowhere, it's not catastrophic, it's not bad. It's just more challenging, and you have to be more mindful and selective in your approach.